Hey guys, it is Julie here with JT Wealth. In today's video, we are taking a look at 4 digital payment stocks that have the opportunity for some great growth. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are discussing 4 companies that with the boom in digital payments, their stocks are one to keep an eye on. So in today's video, we are going to take a look at each of these companies, what they do, and what analysts are predicting for their stock's future. Just before we get into all of that, this is just your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out some of the great links in the description. This includes a link to Webull, who right now is giving away 2 free stocks worth up to $1,850 for opening and funding a new account. So make sure to check them out. I know many people are looking to switch up their brokerage for one reason or another, and Webull will cover your transfer fees up to $100 as long as you're moving over $2,000. Plus, they are a great platform that has both pre- and post-market trading. All right, now let's get into these digital payment companies. And keep in mind, guys, that this video is not a suggestion to go out and buy all of these stocks or even one of them, but just to bring to you new information that you can then go do further research on and see if any fit in your portfolio. All right, the first digital payment company we're discussing today is called Fiserv. Fiserv trades under the ticker FISV and is currently at about $112 per share. Now, the Fiserv stock comes in as a strong buy with 17 buy ratings and 2 holds, and an average price target of about $133, which would be nearly a 20% potential upside over this next 12 months. And we do have some recent ratings within this last month. Now, our hold rating for $113 comes in pretty much even, but the highest price target on there is for $160 from Mizuho Securities, which would be over a 42% potential upside. And on the TipRanks top smart score, it comes in as a 10 out of 10. Now, Fiserv was recently awarded quite an honor, as they were named as one of the world's most admired companies for 2021. Fiserv, who is a leading global provider of financial services technology solutions, has been named to the annual ranking of Fortune's World's Most Admired Companies for the 8th consecutive year. Now, among companies in the financial data service categories, Fiserv received the top rank for people management and second highest marks for social responsibility, innovation, use of corporate assets, and long-term investment value. It was also recently highlighted that Fiserv is one of Maple Lane Capital's top 5 holdings, as Maple Lane took advantage of the underperformance of Fiserv during 2020 and created a big position in the second quarter while continuing to add to that position during the third. Also touching on the Fiserv stock was Bill Nygren, who is Oakmark Fund's portfolio manager, and he explained why Fiserv deserves to be included in his value picks. He says if you look out just a couple of years and give them full credit for the synergies that they expect in expense savings that they record from the first data acquisition, that multiple falls from about 20x down to 16x. And then further, there's a business inside of Fiserv that accounts for less than 5% of its revenues, and that is Clover. Nygren mentioned that financial firm Square Inc. trades in the public market for more than all of Fiserv's market cap, but Clover, which has a lot of similarities to the business of Square and actually processes more volume. On that note, the next company we're taking a look at is Square. They trade under the ticker SQ and are currently around $240 per share. Now, Square comes in as a moderate buy out of 33 analyst ratings. There are 19 buys, 12 holds, and 2 sells. The average price target is $227, which would actually be about a 5% potential downside. And that is due to our wide range of price targets. We have that one hold rating from Webull, which is actually a negative 16.8%. But in the last month, we have 2 buy ratings at the $300 price point for nearly a 25% potential increase. And on our top smart score, the Square stock comes in as a 10 out of 10 rating. Now, some might be under the impression that payments company Square has come too far too fast, especially with the US economy still on shaky legs. But it is this author's belief that we'll be looking back in 9 or 10 years, realizing that Square was just still clearing its throat prior to liftoff. Prior to the unprecedented disruption to small businesses affected by the pandemic, the gross payment volume on Square's network had grown by an annualized rate of nearly 50% between 2012 and 2019. Of course, the big buzz about Square is peer-to-peer payment platform Cash App. Although Cash App lets Square collect merchant fees and bank transfer fees, the growth potential looks to be all about investing and Bitcoin exchange. In less than 3 years, we've seen Cash App's monthly active user count more than quadruple to 30 million and will likely surpass the seller ecosystem in 2021 as the biggest driver of gross profit. The third company that we're taking a look at is Global Payments. They trade under the ticker GPN and are currently at $198 per share, coming in as a strong buy with 14 buy ratings and just 1 hold. The average price target is about $216 per share for about a 9% potential upside over the next year. Now, we only have 2 negative potential returns, one actually coming from a buy rating that was about 3 months ago, so likely that's just out of date, and the other being a hold rating that came in 10 days ago for a negative 6% potential return. But we do have 2 ratings on the high end of $235 for about 18.5% potential growth. And on the top smart score, it comes in as a 9 out of 10. Global Payments' buyout of Total System Services widely exposed it to the fast-evolving payments market globally. Constant investments in technology led to a shift in the company's business mix towards technology enablement, and it undertook additional cost-cutting measures to cope with the pandemic's impact on business. Its operating cash flows have been improving over the years, thereby boosting investments in technology. The company's expected earnings growth rate for the next year is just over 18%. The company has been rolling out innovative technology-based solutions backed by its advanced technologies and operational advantages. The massive shift of the payments industry from cash to digital form of payments has been benefiting the company significantly, as Global Payments has been emphasizing on shift to electronic and digital payments by leveraging its distribution channels and enhanced solutions. Furthermore, Global Payments boasts of a robust balance sheet with increasing cash balance and declining debt levels. The company has solid cash-generating abilities, which enables it not only to make business investments, but also undertake prudent capital deployment measures through share buybacks and dividend payments. Notably, the company has enhanced its share buyback program to $1.25 billion this past October. And the last company on our list today is the tried and true Visa. They trade under the ticker V and are currently at $208 per share. They come in as a strong buy with 15 buy ratings and 2 holds, and an average price target of $241 for just over a 15% potential upside. And many of those ratings came in just within this last month. The highest rating on the board is $270 per share for nearly a 30% potential upside. And on the top smart score, they come in as an 8 out of 10. Now, due to regulatory scrutiny, Visa did have to terminate a $5.3 billion acquisition of Plaid that it announced a year ago, but it did acquire Latin American fintech startup Yellow Pepper last quarter. And with $18 billion in cash and investments on the books, Visa will be able to continue investing in its payments and digital data technology ecosystem. Also consider Visa's free cash flow profit margin over the last 12 months. Even in a difficult period, the company posted a free cash flow profit margin of nearly 44%. Talk about an enviable business model. Bear in mind, this is cash generated over and above investments in property, equipment, and other capitalized purchases. So it's money Visa can use to pay its dividend, repurchase stock, and make acquisitions. Put another way, Visa looks like a great long-term value. So there we have 4 different digital payment companies, all with their own great potential upside. Now, you guys know I always love hearing from you. So out of these 4, which company catches your eye the most? Or what other digital payment companies are on your radar? Make sure to leave your thoughts in the comments down below. And just a reminder that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Always make sure to do your own research and due diligence before making any investment decision. If you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic weekend, and cheers.